Gentlemen, top of the morning to you. Today is February 1st, 2025, and I am in the cement jungle of LA, so pardon the noise. I want to talk to you about risk. I was thinking this morning, I was walking to go get a coffee, right? You're in LA, safest place in the world, right? You go get a coffee and you're like, okay. You walk the streets, you have to have your wits about you, right? Big city, you gotta be aware. There's risk. You go to get a coffee, there's risk. You drive somewhere, there's risk. You do anything, there's risk. There's risk to life, right? And so naturally we seek to avoid risk as a survival mechanism. However, when it comes to investing, you have to curate risk. You have to take risk intentionally. That is the entire name of the game. It is uncertainty. And so I had a conversation with somebody yesterday and they said, basically, well, I would buy oil stocks if you were confident in the outcome of their performance. And the reality is, I don't know. I don't have a damn clue. Nobody has a clue. You look at a company with significant stable growing revenue, large margins, high returns on invested capital, limited debt offered at a reasonable price, and you aggregate 20 or 30 of those companies together, you diversify so that you've got a portfolio of companies that you're not taking too much risk, but the entire name of the game is risk, right? So a lot of people seem to avoid investing because they either don't understand it or they view it as risky. That is exactly correct. It is exactly risky. That is what you're doing. You are taking risk and you are getting compensated for that risk. Now, the thing is, you need to be intelligent about the risk that you're taking, and you need to seek to minimize risk through different methods like diversification to some degree. And you need to be intelligent about the risk that you're taking. A lot of people are taking a lot of, I would just call it speculation, but they're taking, let's call it insane risk or YOLO risk or whatever you want to call it, with meme coin risk, which is like, I hope that this crypto pumps 2x by tomorrow or whatever. Or a lot of people are, they gamble on short-term weekly options or whatever. My point is there's a lot of ways to take risk. And as an intentional or intelligent investor, you have to realize that the name of the game is risk, that the outcome is entirely uncertain. But what you're looking for is probabilities. If a company has been growing for 10 years at a significant rate, and it's got good prospects, chances are it's going to continue growing at a decent rate, right? If earnings are stable and earnings have grown, chances are that's going to carry forward into the future, especially if you have a brand with or a company with some brand or defensible market position. So the real name of the game when it comes to investing is to acknowledge that to enter the door, you have to agree to risk. That's the whole thing. So it's not the avoidance of risk, it's more or less the minimization of it, but it's the acceptance of it. If you own a portfolio of 20 or 30 companies, right, and that's very concentrated as compared to most investors. But if you own a portfolio of 20 or 30 really solid, strong companies, you may not know what is going to happen. You don't know what's going to happen, the prospects of the country. You have no idea what's going to happen in the future. You have no idea, right? And so to say that you have any idea as to what's going to happen with security prices, again, no idea. The reality is that you accept this risk and you own first-class assets, and the risk kind of takes care of itself. There are methods of taking risks that are intelligent. The point of the message today is that in the world of investing, the entire name of the game is uncertainty. You don't know the outcome, and a lot of people look for certainty of the outcome, and they miss the point. The point is that the name of the game is risk. It's just about owning the right assets and the right companies such that the risk is minimized because you know everything about the company. So if the price, for example, Buffett gives the example of, if Coca-Cola sells 1 billion cans of Coke and their stock price falls by half, are you going to be upset or are you going to buy more of the stock? And the reality is that if the stock price fell by half and they sold 1 billion cans, chances are people are going to still drink Coke and they're going to sell 1 billion plus cans next year. And so therefore the stock, although by Wall Street terms would be deemed as risky because it's volatile, it would be deemed more risky if it fell by 50% because its beta would go up. but in reality, you would be getting a discount. So from the value investment perspective, you would be reduced. When the price goes down on a good company, the risk is reduced. So think about that. Think about the way that you're taking risks. Think about the fact that in the investment game, nothing is certain, but you have to accept that risk is the name of the game. That is exactly what you're doing. And so while there's people that seem to want certainty about the outcome, there's no such thing, right? You don't know what's going to happen, but you can construct a portfolio such that the probabilities are in your favor, that the prospects of a diversified portfolio of good companies are going to improve, and therefore you're going to probably earn a reasonable return on capital over time. That's the name of the game. And look at this view before I end this. Look at this view. This is crazy.